So, despite the economic chaos going on around us, it is still technically home buying season. We're growing into the hottest time of year to purchase a home. There's going to be hundreds of thousands, if not a couple million housing transactions still going on in the next 6 to 9 months as we round out 2023, despite the economic chaos going on around us, despite abnormally high mortgage rates in comparison to the last handful of years. And despite the fact that interest rates are fluctuating, homes are less affordable and there's an inventory crisis. With all of that craziness going on, there's still going to be a lot of home sales going on the next 6 to 8 or 9 months. So we're going to cover in this video a little bit about house buying strategy. And we're going to most importantly cover how to pick a quality mortgage lender so you can get the best experience in your home buying process going throughout 2023 and beyond. This is JP with Blueprint for Prosperity, helping you to increase your net worth through relationship banking, maximizing your borrowing capacity, proper use of life insurance, and the ownership of real estate. Like the video, subscribe to the channel. I'm uploading content on a daily basis to help you customize your blueprint for prosperity. So one of the most important portions of this strategy is going to be around making sure you're in a proper buying position. Having your finances in order is the obvious one to get out of the gate. Let's just get that out of the way right now. You need to have the best credit you can possibly have at this time. You need to have cash on hand, though I'm going to speak on that in a second. And you also want to be good on your DTI, your debt to income ratio, and making sure that you have enough room from your monthly debt expenses to your income for a decent sized mortgage payment so you can actually qualify for the home that you actually desire in the neighborhood and the part of town that you desire. So that's immediate to get out of the way, which I've shot some videos on already, how to position yourself. And I'm going to put out more content around how to put yourself in a proper position to buy your ideal home. I've already covered some of this. You go down and check the playlist. I have mortgage ready, mortgage preparation playlist. You can find videos around this already there. But we're going to kind of keep it short on that portion because I have other things I want to cover in this video. So my number one strategy when it comes to buying your primary residence, because there's this huge debate around whether or not it's an asset or not, or a liability. We're not going to go into that much in this video. But I will say that it's strictly going to be based on your psychology and your financial positioning, your financial plans. If your primary residence turns out to be an asset or a liability, it's all about how you structure it. One of the most important things that I always stand by and preach to the clients that I work with myself on a daily basis when it comes to the home buying process as on the lender side is to minimize the amount of cash they put into their purchase. This may be counterintuitive to what many of you have been taught in the tradition of putting sizable down payments on properties. And I'm not necessarily saying it's a bad thing per se. For those of you who may be watching this video and have put down payments or saved a bunch of money for down payment, my argument with that is a well-rounded financial professional is opportunity cost. Once you put that money down on that property, it can help lower your rate. It can help lower the amount of money you're borrowing. It does have monetary benefits, don't get me wrong. But that money is locked away in the equity of that property and only accessible one of two ways. Either you borrow that money back out, which makes it debt, or you sell the property, meaning that you're making a very significant lifestyle move. So anything short of those two, and you pretty much can't access that capital again. And in my personal opinion, and many other savvy financial professionals and successful individuals, you can't eat equity, meaning you cannot do anything. Equity has no value until it's realized into cash. So I'm not a big proponent of putting major down payments down into homes. I am a big proponent for zero down or low down payment options on homes when it comes to your primary residence, because your cash, though you need to show you have it to purchase the home, you want to show the lender you have it. So I am encouraging you to continue to save or to start saving. But what I am a little opposed to, or at least recommend you consider, is the opportunity cost and putting that money and locking it away in that home for whatever duration you live there, or until you try to go out and borrow it again out, which, if you think about that, you're taking money that you saved or earned and putting it into debt over time. So that's one of the most important parts of that. And it's relevant because I'm going to show you how that plugs into picking a quality lender and how you can go in low to no down payment even with that money available to use, how you can, save that money to hopefully go do other things. Use it to build out, maximize your credit further, start or grow a business, invest in real estate, invest in the stock market, go do something else productive that money is going to give you a better return on than locking it away in your home. But how do you go about picking your lender, and what are you looking for in a lender when you're considering this in that process? The number one thing I have down is someone that is accessible and communicative, meaning that this person, even if they're digital or online, they may not have to be somebody at a local bank or branch near you, which I am in favor of, because one of the next ones on this list is related to that as well. But you want someone who is accessible and communicative, meaning that they can be reached, whether it's by phone, email, whatever is comfortable for you. Like going through this very important financial process, probably your biggest single purchase you're going to make in your life, you're going to kind of want somebody who's you can reach out and touch, or you can reach out and ask questions, or when you're worried, get some clarity or some calm. And picking the wrong lender who's hard to reach, who doesn't respond very well when it comes to the communicative part, somebody that's not giving you enough information about the process. There should be no reason that you don't understand, at least have the details provided to you. Now, you may not understand it fully. It's not their job to necessarily be a flat out tutor, but they should be providing you a lot of information and answering a lot of questions throughout the entire process, not just the early part of getting your application. So you're looking for somebody who you can reach out and access. And for many of you, that may be somebody you can walk into a branch and physically lay eyes on. Some of you are going to be comfortable working with some of these bigger online lenders where that person's halfway across the country and on the phone or digital only, or local or mortgage brokers around the country who may just have better products or better rates. But you need to find a lender that is literally accessible by your comfort level. That is most important, and that communicates at the level you need them to. So I recommend you sorting that out before you even commit to any type of lender. You need to sort out what type of experience am I looking for. Next, they offer assistance or incentives that help you with closing costs and other expenses. And this should not be very hard to find. Most decent lenders, decent size quality institutions and lenders have some kind of incentive towards closing costs and, other bonuses and incentives that help get you into the home, and even some money that you can get like cash back on the purchase, or money towards your insurance and taxes and stuff like that. You'd be surprised the incentives that are out there. They exist. They're not too hard to find, but you want to shop and find lenders that have this, up front, and you don't have to jump through a ton of hoops to get to it. The reason for that ties back into my low to no cash, strategy when it comes to buying a primary residence, because if they have incentives on the table, that's money on closing and that's money on other expenses you don't have to come out of pocket with. Again, you want to show them you have it. They don't want you to come to the closing table and you don't have anything in your bank account, because they at least want to see reserves. But you want to do your best to keep as much of that money in your pocket. And most lenders are going to understand that if they have any kind of skin in the game or any kind of experience as a lender or in the banking sector at all. We get it. Most of us understand that's not the best use of your money. So you want to find lenders who offer incentives, closing cost assistance, and other incentives, grants and things like that, literally from that institution. We're not even talking about from other sources. We'll get to that next. But you want companies or lenders and institutions that are going to offer you, closing cost assistance, grants, and all kind of other little financial perks and incentives to get you through that home buying process and save you as much money as humanly possible. Next, you want a lender or an institution that is compatible with local and state down payment and closing cost assistance programs, as well as area specific incentives. Repeat that. You want a lender that is compatible with local and state down payment and closing the cost assistance programs, and also area specific incentives that are offered through your local and state governments. What does this mean? What that means is there are many programs out there on almost every local and state level to incentivize first time and future home buyers. Even if you're not a first time home buyer, which you are every 3 years, you don't buy a home, by the way. But whether you're a first time home buyer or just somebody who's on their second, third, or fourth home, you want a lender that is compatible with local and state assistance and incentives. They may have programs where if you move into a certain area, you can get so much down payment and, money put towards the purchase of the home, and I mean pretty decent amounts of money. We're talking 4 and 5 figures towards closing costs, down payment assistance, all of that. And you just need to move into a certain area and stay there for so many years. And that equity is locked in, or forgivable loans, or just outright grants. They are out there in every local and state market. They are out there. And you have to understand that they're usually going to only work through so many lenders in that area. So very important. It is you'll find these programs and not realize until you're knee deep in that they don't work with the lender that you're trying to work with. And you'll miss out on thousands of dollars. You want to make sure that they're compatible with the lenders that you're interested in, which I recommend you shop a minimum of 2 to 3 at a ground floor level, and maybe even a little more than that if you're not really stuck to or seeing, major incentive to work with just 1 or 2 institutions. Like, they're not offering enough. You want to get as competitive as you can take. But, you want to make sure that the lenders you're shopping are offering enough themselves and compatible with local and state. Why? Because again, going back to the strategy in the beginning, this allows you to minimize how much money you have to bring to the table. And so if there's institution or lender related closing cost assistance, credits and grants, and local and state credits and grants, and all of that's pooling together, allowing you to keep your money in your pocket and still get money down payment money on the home, still get your closing costs covered, your rate bought down, your points paid off, and all this other stuff. That's what you're looking for. You're not trying to go into the house upside down. You still want down payments. You still want closing costs covered, but you want to do it with somebody else's money that's completely forgivable or a complete grant, completely gifted. So you want lenders, which you're going to have to work with your local and state entities to find out who those lenders are. Because again, I assure you, it will not be every single bank that you have available or lender you have available in your market. You got to go talk to and work with your local and state, those particular departments within the local and state government to find out who they're working with lender-wise to funnel those different incentives through those programs. You want to work with institutions, ideally you have banking relationships with, strong ones. Relationship banking is literally the cornerstone of this channel, and it's honestly one of the cornerstones to financial success in this system. You're likely going to get a more seamless and convenient process because think about it. If your banking relationship, your savings is already there, your checking account's already there, your money's there, maybe you have a credit card or 2 with them so they know what kind of borrower you are. All of this is data points for that institution, and they're just going to throw more incentives your way and feel more comfortable with you as a borrower. And they're going to be more seamless in getting the paperwork they need and on the bank statements and all that different stuff is going to be right there within that institution. And it makes it so much more convenient and efficient for you and the lender and the underwriter to get this done if you're already banking with them. Not to mention, if you're banking with them and have a reasonable relationship, they'll probably cut you even more incentives because they're going to be, again, you're already a client, you're a profitable client, and you're expanding a huge part of that relationship with them and by keeping that business in-house. Banks love that kind of stuff. They love new customers, but they love existing, growing customers. So they are likely going to have incentives at play because you already bank with them. They might have discounts on the mortgage rate. They might have discounts on points. They may have, additional grants and incentives that are available just for you being a customer. Look for those things. Search for them. Find every single penny you can to close on this property without having to touch your own money. There's unavoidable fees like appraisals and inspections that you're going to have to deal with, but those are 2 and 3 figure deals. You're not going to have a $1,000, $1,500 appraisal most likely, or a $1,500, $2,000 inspection. Not common. It happens, but it's not common. Most likely you want to be in a situation where you barely put out $1,000 to get into that property and all the other money came from other sources incentivizing you to buy the property. That's the ideal scenario because you get to put your money to work while still getting in your dream home. So just to recap really quickly, low to no cash, best buying position you can possibly be in, an accessible and communicative lender, offers assistance and incentives that help with closing costs and other expenses, It's compatible with local and state programs for down payment and closing cost assistance and incentive-based programs around areas, that exist in most metro areas where they want you to move and build up certain areas. And if you're okay with that, being in those neighborhoods, then there's usually a lot of money on the table for doing so. But you need to find lenders that are compatible with that so you can pool all that together. And start shopping within institutions you already have strong banking relationships with, because they're likely going to be more seamless, more convenient, and hopefully give you more incentives for already being a great client, already being a great customer. So I wanted to bring this to you because, again, it's going to be a hot time to buy. Even with all the craziness going on out there in the market, it's still going to be a wonderful time to buy a home for many people who are in position. And again, if rates even start to taper down and put you in a proper position, you want to have all these other boxes checked when you're looking for the quality lender that matches you best. So if the rates drop down at some point and put you in striking range on your ideal property, you're ready to go. You're not waiting around. So that's very important. So I just wanted to bring this content to you guys because it's perfect timing. This video is being shot mid-April. Perfect timing for you to get your ducks in a row so you can get into your dream home, because real estate is still one of the best ways to build wealth in this country. So I appreciate y'all tuning in. I enjoy bringing you this content. As always, I want y'all to stay focused, stay in motion. I'll see y'all soon.